Africa Business News, proudly sponsored by EY.
Business News. Kenya's rebased GDP moves it into the top 10. In West Africa, we take a look at Nigeria's oil sector. And South Africa's fourth largest bank cements its access to Africa's largest banking network. Stay tuned.
Africa, it is huge, it is diverse, and its business landscape fascinating and dynamic. And that's our business here on your favorite weekly African business stop. We join, of course, from Nairobi by Beatrice Kachenge, and we are with Christine Mundo here in Johannesburg. And hey, I have a special guest with me later on, Adetunji Omotola, giving us the rundown on West Africa's business news today. My name is Victor Homoeswana, and this is the Africa Business News. Mambo Beatrice, good news on the East African agenda for this week. Kenya is now in the Africa's top 10 economies. That's a first.
Well, Victor, Kenya is no longer a developing country, as you said, and this was after the rebasing of the gross domestic product. It was rebased upwards by 25% to about $53.2 billion US. Now, this propels the East African nation, which is the biggest in the region, to a middle income status and is now ranked the 9th in the continent, overtaking Ghana, and Tunisia. Now, the recalculation of the economy will give a greater weighting to sectors such as mobile money transfers, and of course, you're looking at the informal businesses. And Victor, I am sure that you're aware that Nigeria also rebased the economy, making it the largest in Africa, and the African Development Bank projects that the trend is likely to continue, and the trend may lead to the GDP of Africa growing by a third. And notably, the UN Statistics Commission recommends that countries to rebase their economies after every 5 years.
Well, but tell me, do you feel any richer now that the economy has been rebased, Beatrice?
Well, Victor, wouldn't that be grand? How I wish that would translate to a 25% increase on my income, but that's not the case. Well, rebasing essentially means that the government will be able to put in more appropriate strategies for collection of revenues and, of course, to determine sustainable borrowing when it comes to some of their requirements. And this is, of course, going forward. According to the tweet from Ugandan president, I love East African presidents when they tweet. President Yoweri Museveni, the Ministry of Health has confirmed a case of Marburg death. He has advised the public to stay calm and be vigilant. What's that all about? Well, that's right, Victor. Uganda and Rwanda as well are also on high alert, and this is following an Ebola-like virus by the name of Marburg. And that has already killed one person in Uganda, and about 80 people are already in quarantine. But what is sad, Victor, is that 60 of those who are in isolation are actually health workers. And of course, as is with Ebola, there is no known cure, and the similarities between the two diseases are quite striking. And just like Ebola, Marburg is not an airborne virus, and the disease is spread through direct contact with blood, tissues, or even bodily fluids from an infected person. But probably on a positive note, Uganda in the past has managed to contain the deadly Ebola virus. So we're waiting to see what reactions the government will be taking towards this. Stay indoors, play it safe. We have the good and the bad. What's the ugly this week, Beatrice? Well, Victor, before I tell you about the ugly, maybe a little bit of history. Now, 30 years ago, Kenya and Europe struck a trade deal that would see the East African nation enjoy a duty-free regime for its exports. But, well, as I say, all good things must come to an end. And that was put to test on October 1st. And that was the deadline for signing the new economic partnership agreement, which lapsed and expired. And now the EU has started taxing duty from between 4 to 24%. Now, it is particularly precarious for Kenya because 95% of the country's horticultural exports go to the EU. Now, Kenya is one of the only countries in Africa that is now being taxed for its exports to the EU. And what is at stake? We're looking at less income for the country in terms of top foreign exchange earners. Secondly, the industry players are saying that they're expecting to incur losses of at least 1 billion shillings a month. And you're looking at 2 million people directly or indirectly employed by the sector. Asante sana, Beatrice Kachenge out of Nairobi, Kenya. We check into Southern Africa now, where Christine Mundo is going to take us through some of the headlines out of the region, starting with what should be the biggest story, not only in banking,
but one of the longest awaited announcements by South Africa's fourth largest bank, Nedbank. Christine.
That is it, Victor. South Africa's fourth largest bank, Nedbank, has bought a 20% stake in EcoBank. Now, for the longest time, we had been criticizing Nedbank about being last of South Africa's big banks to sort of go into Africa. This is quite a telling statement. You will remember in 2011, they loaned EcoBank some $283 million. They now have the option to buy an 11% stake with that money and an additional 9% to get to the 20% that they now have. So this gives them a great footprint in Africa. We know EcoBank is present in about 36 African countries. But also they become the second biggest shareholder in EcoBank, just after the Qatar National Bank, and possibly giving them an exposure to the Middle East market as well. Of course, we know that Qatar Bank is, of course, the biggest lender in the Middle East by market value.
And I must give you some credit there. Last week you predicted the new governor of the Reserve Bank who takes over in November. Tell us about Lesetja Kganyago and what you think he will do for the South African Reserve Bank with Jill Marcus stepping down.
Well, that is a very easy question, because judging by his statement yesterday, he said he's pretty much going to be doing the same thing that she had been doing. And I think that was good for the markets, that calming factor to know that there was going to be a continuity in policy. But one thing struck me is the man's energy. And this is somebody that I'm very confident in just by what I saw yesterday. A man who says he's ready to take this on. He's been at the forefront when there's been challenges, and he's ready for this job. So I think that I was eased yesterday, along with most of the market.
I've yet to meet a Kganyago who shies away from a challenge. What do you make of Zimbabwe, though, auctioning its own diamonds? Is this brinkmanship? Is it showmanship? Or what do you think about that?
Well, we know that in the beginning of the year, they signed a deal with a Dubai-based company who was going to be facilitating the sale of their diamonds. The first auction didn't go down well. There was issues of money transfers, amongst other things. And already then we started hearing the mines minister, Albert Chidakwa, saying that the country was going to be looking at options on selling its own diamonds. Of course, you know, it becomes a lot cheaper. But if you know that there is that case about the Zimbabwean diamonds being seized by Belgian authorities, so you also remove that factor as well. So I understand the first auction went very well, judging by local media reports. Some 74,000 carats were up for sale. This was called a very small sale, and auction rather, and that the next one, which is happening in November, is going to be big, according to the minister, where international buyers will be on the scene to stock up some of those gems.
Thanks, Christine. It's time to check into West Africa and talk to my special guest, Adetunji Omotola. Tunji, welcome to the show. I know you as a wine merchant, but a whole lot of other things, an enthusiast, Afro enthusiast. Security concerns, Ebola or not, Nigeria is still a large economy, and it should be, because Marriott International, the hotel group, has its eyes on Nigeria among other African countries for its growth.
Absolutely. Well, look, basically, Victor, I mean, what's happening in the Nigerian space in the past few weeks has been a mixed bag. Obviously, you had the challenge in terms of the church collapse, which was very tragic for South Africa, and I think they're trying to resolve that now. But also in the business space, there's a lot that has been happening. First of all, in West Africa, Ghana, the neighbor, we have a major deal for $900 million that involves a Dutch bank, as well as African Finance Corporation and the Rand Merchant Bank. So that's a very huge deal, $900 million, just under $1 billion. And then closer to home, we have a major deal also in the pipeline with the hotel they call the Transcorp Hilton. They are selling about 800 million shares at about 50 kobo, but they're going to be selling it for 10 naira each. So each share would be going for 10 naira. And what they plan to do with that money they raise from the public is to build hotels in Ikoyi in Lagos and also expand into Port Harcourt. And then, of course, the recently concluded Abuja Trade Fair. Yeah. There's a major opportunity there for 2 weeks for about 12 countries to participate in spite of Ebola and the travel bans here and there. And they managed to raise about $10 million from that. And also on the local content side, as you know, most of the deals in Nigeria, the big deals, the big ticket deals, are in the oil and gas sector. And what the gentleman who's managing the local content board declared was that there was about $5 billion.
$5 billion into the oil industry. But talking about the oil, which is still the mainstay of the Nigerian economy, I can't think of anything more dramatic than the U.S. not buy Nigerian oil. And that has just happened since 1973. That's more than 40 years we are talking here.
Absolutely.
Suddenly a change in direction. What do you make of that? Is it tragedy or is it something to be excited about?
Well, first of all, you remember that when President Obama was running for elections in 2008, he made an affirmation that they were going to stop relying on foreign oil, especially those who don't like them so much, so guys in the Middle East. Of course, Nigerian oil is one of the best grades of oil, but I think with the U.S. Finding their own oil, Nigerians have to look elsewhere as well, because we have a lot of people who are looking for Nigerian oil. I believe that South Africa is buying about $750 million worth of Nigerian oil at the moment, obviously given because of the sanctions in Iran. But I think South Africa is trying to go back to Iran to get Iranian oil, probably because it's cheaper than Nigerian oil. But I think the critical thing is that there's a lot of countries who are now coming to the oil space, your big giants like Brazil, your China, even in Russia, who are looking for Nigerian oil. So it's not really a train smash.
Okay. Well, talking about the neighboring economy, Ghana, growing as an economy, 3 financial institutions, Nedbank, Standard Bank, and Rand Merchant Bank, getting involved in a major power transaction there to increase the country's capacity. But finally, the strategy by the government of Ghana to increase intra-Africa trade apparently pay off. ECOWAS already outstripping the European Union as the trading partner of West Africa. That should be exciting stuff.
Absolutely. Look, I've always known for the last decade or so that a lot of countries or companies who want to go into Nigeria tend to go into Ghana first. And also you got to remember that Ghana is a smaller country and it's easier to do business in Ghana compared with Nigeria, which is quite sizable. And of course you got the insurgency in the northern part of Nigeria. So what people are doing is looking at companies in Ghana, investing in Ghana. I mean, EcoBank is based in Lome. Yep. Lome is right next door to Accra. So people are investing more in Ghana because it's a smaller market, but also because it's closer to Nigeria, so they can use Ghana as a launch pad into Nigeria.
That was Adetunji Omotola. I know him as a wine merchant, but he's a very enthusiastic Afro-optimist, very good agent and proponent of Nigerian business, and he's been doing a lot of trade and investment facilitation between the two countries. Thank you very much for joining us. And as we wrap up this week's show, I have a quick trivia question. Well, I'm only with you, Beatrice, so it's for you. Which airline was founded on this day in 1919? I'm talking about 7th October. It is not an African airline, but you are East African. It has since become an alliance partner of a major East African airline. What's your guess, Beatrice Kachenge?
Well, you mentioned an alliance partner with one of the East African carriers. I'm thinking of KLM.
Koninklijke Luchtvaartmaatschappij. No wonder we know it as KLM. That is the national flag carrier of the Netherlands, headquartered in Amstelveen, near its hub at Amsterdam's airport, as we know it, Schiphol. It was founded by a man called Albert Plesman on October 7th, and it has since formed an alliance with Kenya Airways along with Air France. We also wish Uganda and Equatorial Guinea a happy Independence Day. They celebrate their national days on October 9th and the 12th, respectively. That's what we all have time for here on Africa Business News. Thank you, Beatrice Kachenge out of Nairobi, Christine Mundo in Johannesburg, and thanks for your special contribution, Adetunji Omotola. Stay tuned to CNBC Africa. We're back with you next week.